Hello. Thank you so much for tuning in. Can you guys hear me? How's everyone doing? Thank you so much for tuning in. Appreciate it. So let me remove this mic off. So futures are moving mad actually. ES is up like. Can you guys hear me? Right. So let me see. Futures are actually moving a bit mad here. S&P 500 is up around 0.2%. Nasdaq is up around 0.3%. Uh, Morning Bones, morning JJ. Thank you so much for joining. Appreciate it. So we got a lot of stuffs going on today. So I hope you guys read the morning notes posted under my tab. We're just gonna go over what to expect into this week, and we're also gonna look into some earnings which are gonna be dropped tomorrow. So you guys know that the Dow 30 are actually having like 30 stocks in there. So almost half of it are reporting earnings this week. So especially like starting with Johnson and Johnson, Verizon, American Express, Mastercard. These are some big companies which are reporting, especially in the Dow Jones. Microsoft, a big tech. Tesla this week. Tesla is not a part of Dow 30, but still. This week is mostly value oriented. Next week we're gonna get that big tech stocks like Apple and stuff reporting. Apple, Amazon, Google reporting earnings. So that's gonna be interesting. So if you're a value trader, if you're one who trades stocks, especially like healthcare in particular, like stocks like Johnson and Johnson or anything in Dow 30, like if you're a trader of any of these stocks, American Express, Caterpillar, Boeing, Goldman Sachs already reported, Chevron, IBM reporting earnings, Intel reporting earnings, J&J is reporting, 3M is reporting, Procter and Gamble, are they reporting earnings? I don't think so. But I'm pretty sure they are, which is one of the Dow 30, so be very careful. Hey, morning, futures are ripping. Oh yeah, they are. They are actually moving mad, as I said before. They're getting pretty good. So when it comes to SPY today, as long as they stay above 395, they're gonna go all the way up to run a test to 398.50. You see this line coming all the way from all-time highs. So that's where we are going to set our bear pivot. And for the bulls, 395 is gonna be the first pivot. If we move on to the smaller time frames, you can see even more clearly. There you go. So first level 397.60 to 398. That's gonna be the first level of resistance to keep an eye out for. So let's see how it goes. If you're a QQQ trader, if you're a trader who trades Nasdaq in particular, 280. Let's round it off. 280. As long as they stay above it, watch out for 284.28, and then watch out for a spike to around 288 and change to the upside, because that's where the Nasdaq's trend line is currently in. So just like how S&P 500's trend line is at 398.50, the Nasdaq's trend line is coming in all the way at around 288-ish. So are they gonna use this earnings as a reason to pump the market up? Let's see. I personally believe the next big whipsaw which we are gonna see in the markets is gonna come. I mean, the reason they need a reason to sell off. It's not like they're already in a downtrend, but so every time SPY nears this downward sloping trend line, you'll see the bulls come out and say, "Oh, we're gonna go into a new bull market." No, when it happens, we'll take it from there. So until that time, we're just gonna stay cautious. Don't get overly bullish here and get whacked. Don't get overly bearish here and get squeezed. This is a point where you just stay back, relax, and then watch the market and see what it's telling you. So we're gonna do exactly that. You don't have to trade every single day. Just focus on scalping or day trading for this week, because there is a lot of uncertainty. Literally, like half of S&P 500, most of the S&P 500 will be reporting. And yeah, let's see. The recession is here. They are gonna come out and say that we are expecting the worst and the demand is gonna slow down, and you're gonna hear all these things. You're gonna hear all of it in the earnings call, but you'll still see the stocks pushing higher for some reason. That can happen. That's why I always say stop gambling on earnings. So if you read the yesterday's notes which has been sent out, especially with stocks like Tesla, Microsoft, especially with those, because lots and lots and lots of people are going to gamble with options. The premiums are going to be overly inflated. They're going to try and do their best to keep it within the range and then kill both the calls and the puts. So you don't want to get caught up on any of that by gambling on calls and puts into options. So what are you guys watching today? Let me know. Let me know in the comments. Are you guys bullish? Are you guys bearish? Let me know. Let's see. Let's take it from there. If you guys are bullish, so we can talk about the bull case. If you guys are bearish, let's talk about the bear case as well. So let me know. Are you guys bullish today? Friday was pretty bullish, not gonna lie. And today, gotta wait and see, I guess. This, what you're seeing on the screen, that's the futures contract. Futures contracts of S&P 500. Alright, so if you guys use TradingView, I have some screener. Like I had a lot of questions about stock screeners and how to use them and what's the best screener out there. There is no best screener out there. Every single software over there is going to give you the same details. So and if you're using TradingView, that is, on the side, can you see this fire icon? Click on it. So you can set your settings to anything you want. So last week in particular, I was going with gap losers. Gap losers in the sense, for example, if a stock gaps down pre-market, especially, and this is just let me explain the strategy in a simple way. Before market opens, stock gaps down. Any stock doesn't. So I'm not talking about SPY or QQQ in particular. I'm talking about anything, any stock with an average, more than average of decent volume, like 1 million or 2 million in volume, right? Let's say they gap down. They're not going to keep flushing down. They're going to find support somewhere. So this is a strategy. When a stock gap down, you're going to take one ATR move, that is the expected move, and then find an important area of support. So once they keep on selling off to the downside in the opening bell, they're going to bounce at some point on that particular day. You're going to use that bounce and you're going to monetize it. So when they sell off in the opening print, they're going to find support at an important area on the same day and then give a bounce. They can either reverse every single red candle which they made at the open, or they're going to at least give out, like if they gap down 10%, they're at least going to give like 2 to 3% move to the upside. So we're going to monetize on that. So that's the strategy. It's a pretty risk defined trade. If they keep selling off, you can get stopped out for a small loss, but if they are bouncing, it's going to offer you some nice day trades to the upside. If you want to look up some plays like that, go to TradingView. On the side, you can see this hot list, what they call it. Yeah, hot list icon. Click on it, and once you click on it, you can just go to the gap losers. Always keep an eye out for the volume, because if you're an options trader, you don't want to get stuck with holding stocks with like volumes like this or this. Nah, 192k, no, don't even touch it. You need volume like at least 2 million or 3 million, or at least like a stock which is about $50 to $60, so you can get some decent move on it. So we traded Goldman Sachs like that last week. We traded AZN. We traded Honeywell using the same concept last week. So this week, when it comes to day trade, we're gonna do the same. So we're gonna wait for market to open, and we're gonna see what to expect. So that is something which we are gonna do. Once the market opens, this list is gonna update, and we're gonna get a list of stocks which we need to keep an eye out for, and we're gonna trade based off of it. This is a strategy. Look for plays which are gap down big time. draw the support level after one ATR. For example, if let's say Apple, which is the most traded stock in this server. So if Apple, let's say Apple gaps down big time today at the open or after earnings, right? So once they gap down big time, you're gonna find the ATR. ATR of Apple is at $4. Let's say the Apple closed Friday at 138 and now it's opening at 134. It already made the one ATR move of $4 and change. So you're gonna go long at 134 by putting your stops at 132. And if they bounce it from there to 136 and change, 2 point win. You're gonna get out, in, out, hello, goodbye sort of trades. So it's just an example. Once I give you guys the trades, you will understand what I'm talking about, what I'm on about more clearly. So leading into today, we are going to be. Oh, you guys trade penny stocks, right? Most of you guys trade penny stocks, and I was messing around with the strategy. I was back testing it for a while, using the stocks which are under $5 in particular. I'll let you guys know if I get a positive result in that back testing. I don't want to give out something which is not tested yet because well, 11,000 people in there. I mean, you guys are here to learn, so I don't want to give out something which doesn't work and then make everyone lose money. So I am backtesting something with stocks which are less than $5. So I took like 3 trades based off of that, and it was a paper trading account. It's not real money. It was a paper trading account. So based off of that strategy, I took 3 trades, and all 3 worked out pretty good. But 3 is still a very less of a sample size for me, particularly. So I'm gonna keep doing it for the next 2 or 3 weeks and take at least like 40 to 50 trades based off of the same strategy, and we're gonna see the win rate on that, and then we're gonna incorporate that strategy. Until then, I don't even want to dive deep more into it. So it's about the momentum trades, where like in the pre-markets you'll see the momentum, and then you're gonna capitalize on that and you're gonna dump it. So you're gonna buy it in the after hours if based off the momentum, and you're gonna sell it in the pre-market sort of thing. So let's see how it goes. So I'll keep you guys updated. If that strategy works out, we can incorporate it into our day-to-day trades. But until then, we're gonna test it back and forth over and over again. Right, so Paul is saying bullish on SPY. Bullish short term, bearish long term, as you should be. As you should be. I am kind of bearish, as I said before. Right now they're gonna keep melting higher, and watch the pile of bad news suddenly come out of thin air, and then they're just gonna reverse the market using those bad news as a reason, as if we don't know what's going on beforehand. I've seen it happen multiple times, especially leading into February and March, one of the seasonally most bearish months. You'll suddenly see all sorts of bad news piling up, and market will be currently parked exactly at the resistance levels, and you'll see the bad news suddenly coming out, and the technical analyst will say, oh, it's because of the technical analysis, and the price action traders will say, oh, it's only because of price action, and the news-based traders will absolutely say, oh, it's because of the news. Nah. You'll see that's the coincidence, that's the level which they park at. I've seen this happen multiple times. You'll see the sly of bad news show up all of a sudden, out of nowhere. You won't be expecting it. Connection keeps going in and out. Really? Okay, that's weird. Let me know if that's okay right now. So I don't know what's going on, to be honest. Uh, is it okay now, or is it still the same? Let me know in the chats, like, what do you guys think? Like, is it still a back and forth thing, or is it like, let me know. connection going in and out, connection going in and out. Alright, let's see. So let me go and fix it. Let me see what can I do from my end to fix it. Alright, so let me see if I can stop this, to be honest. So if I remove my face off,